Hey everybody, how y'all doing? It's Crendelacremeinvestments and Wellness back at you again with another video. And today I'm just going to be pretty much breaking down smart money concepts as a whole, as pretty much the foundation, the framework of smart money, and which is the framework of pretty much any trading out there, and which is market structure. If you don't understand market structure, you have a hard time being a good technical analysis or not analysis trader um, in investments. Okay, so whatever you're doing, whether it's breaking retests, whether it's wedges, whether it's channels, whether it's indicators, whether you're an algo trader, whether you're smart money trader, retail trader, supply and resistance trader, the trend line trader, it doesn't matter. If you don't understand market structure, you will have a hard time being a profitable trader with any strategy. Okay, so essentially, um, when it comes to the market, when it comes to smart money in particular, as we all know, we look for the market to make a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, and a lower low when it's trending in a downtrend. All right. And in an uptrend, same thing, just in inverse. So higher high, higher low, higher high, higher low, higher high. All right. Essentially, and essentially we identify these trends on a higher time frame, and then on a lower time frame, um, we'll look for certain confirmations and confluence in dealing with smart money. And I have a majority of them on my YouTube. You can go back and look at my other YouTube videos for that. But this video would just be about pretty much identifying the foundation of what we're doing in smart money. So once we find out these trends on a higher time frame, we'll get to, or and then we'll look for an area on the higher time frame in the form of some kind of supply demand zone. My supply and demand zones consist of institutional blocks, order blocks, and like I said, you can go back to a previous video and kind of look to see what I mean by that. But essentially, we'll look back to come to some kind of supply zone, demand zone, depending on if you're buying or selling, and then we'll, from this point, once we identify our area of interest, we'll get on a smaller time frame and look for certain confluences to decrease our risk and maximize our reward. And that is essentially all smart money is. Essentially it. This, go along, something like this. All right, something like that. So just say this is the 4-hour time frame, and then we'll drop to like a 15-minute to get active. So I'll show you an example here in a minute. So clear all this. All right, so of course this is a hindsight, but I'm just showing you an example of how this works. Of course, when you're trading live, you have emotions into it, so it's a whole different other ball game. But going off of this, we have a institutional move order block right in this area, so go ahead and mark that out. That is now our area of interest. So we would wait for the market to get into this area of interest, because as we can see through market structure, we have been consistently making lower lows, lower highs, lower lows, lower highs to make that new lower low, to make that lower high, to then continue the market or continue trending down. Even though we do have a bigger time frame area of interest down there, but that is neither here or there for this video. All right, so we're on a 4-hour here. So we'll then drop to a smaller time frame from here. Again, this is hindsight. To then find some kind of confirmation within the form of liquidity, order blocks, institutional moves, wipe off, to then just off the side of my eye right here. Again, this is hindsight. I understand that. We have an order block right up in there along with liquidity sweep. to then minimize our risk. Instead of having the risk all the way up there, now we're at a 5 pip risk to how far this went. This is live, so we just cleared actually those lows down there. And at this point of 1 to 20, where do you know in any other strategy that you have the possibility of getting a 1 to 20 in a trade? And that's why I love smart money. Okay, so that is essentially what smart money is. Looking from a high time frame market structure, identifying some kind of supply demand zone within that higher time frame, and then getting on a smaller time frame and looking for other smart money concepts or any kind of confluence that you wish to get involved and active into the market. Okay. Of course, we'd have definitely been taking partials. I wouldn't have just rolled this all the way 1 to 20. I don't have balls of steel like that, but we would have took partials probably at each low, here, and there. All right. So hope y'all enjoyed that video. Hope that kind of put everything on a how do you say it? Easier to understand concept for you. And Crendelacrem out.